Good evening all. Welcome to strategy 1 of our strategy series. Now to start off with, we've started with a nice gentle strategy, and this one in particular is a short-term trading opportunity based off the 15-minute chart to the hourly chart, and it can be used in conjunction with the trading opportunities that we highlight every morning on our Telegram channel. So I'm going to go through the components before we give a quick example of some of these trading opportunities. And don't worry about the details of the parameters, because this strategy does come along with the templates for the MetaTrader 4. So if it is something that you enjoy, you will have that template with you. Okay, so first things first, guys, this is a DAX chart, and for those of you that want to see, you can see the DAX chart in the left corner. And the reason why I'm using this is because this was our last recommendation on the Telegram channel. Okay, so I'm going to be using this off a 15-minute chart. This chart in particular is just a pure price action. Okay, now the first indicator or the first technical analysis tool that we are going to use is a MACD, and here you can see the MACD here. So I'm just going to make that MACD a little bit bigger, and which will shorten my price charts. But what you can see here is a couple of things. You can see here a 0 on the right hand side, and that is a clear black line. The reason why I use that is I use it as I call a watermark. Okay, so it's a point of reference for me for when I'm looking to go long or short. The MACD is used as a contrarian indicator. And what I mean by a contrarian indicator is that it highlights overbought or oversold positions. It highlights when momentum is slowing or picking up. And it also allows for me to see trading opportunities for both sides of the market. Okay, so let's go from a contrarian first. When I have a histogram, and here's an example here, the histogram are the green bars and my red moving average, when that is above, okay, so on top of my waterline, don't forget this is my waterline here, the 0%, the solid black line. When it is above, that will tell me that I should start looking for shorts. Okay, so above, contrarian, I'm looking for it to the opposite of where we are. So here I'm looking for a short trade. We know when the price has lost a little bit of momentum because our histogram will close below the red line. Okay, so an example over here, we can see the histogram is above the red line. That suggests to me that momentum hasn't slowed sufficiently enough for me to take the short yet. However, when my histogram closes below this red line, that tells me that momentum has slowed sufficiently for me to start looking for a trade. Okay, so in this instance, I would be looking for a short trade. Conversely, for a long trade, when my histogram and my red moving average are below the black line, so let's put an example here, there I'm looking to go long. Okay, so I'm waiting for price and momentum to exhaust itself, and then I want to go long. So what we can see here is histogram is not inside the red moving average. That tells me momentum has not moved sufficiently enough to start looking for that long trade. However, when my histogram closes inside that red moving average, I now know that I'm ready to look for an entry, okay, for a long trade in this instance. Okay, second indicator, guys, is this purple moving average. Okay, here you can see the line. That's a moving average. I'll show you the parameters shortly. Okay, so let's take that out quickly. Okay, so moving average indicators. What I'm using is I'm using a period 5, and I am also shifting at 5. Okay, so the reason why I'm shifting at 5 is because I'm trying to find a more aggressive entry. Okay, keep in mind on our Telegram channel, we use high probability trading opportunities, and therefore I'm generally quite confident in getting that early entry or more aggressive entry. Okay, I'm then using a linear weighted moving average. Okay, the reason why I'm using this linear weighted moving average, guys, is that it takes consideration for my most recent trading candles, and it gives it a little bit more weight. That way I'm using that opportunity to trade at as early as possible. So when I say as early as possible, I know that the most recent trend is the strongest one that is illustrated within this moving average. Okay, so guys, again, don't be too concerned about taking notes on these parameters. The template has been given to you, so when you load it onto your computer or your MetaTrader, your chart should look exactly the way you see it now. Okay, so how do we see the combined version of this, as well as how to utilize this particular strategy? There you can see it there, guys, and we'll make this just a little bit bigger. Okay, so Friday we had highlighted a short trade in the DAX. Okay, so we can see price action up here. We are looking to go short. The first things first, guys, we are waiting for our contrarian or our MACD indicator to show a histogram above the waterline. Okay, so remember, that's the waterline. Because it's contrarian, we want price to be above it for a short, below it for a long. In this particular instance, we had called for a short trade, and so we wanted it above. Here we can see that price is above the waterline, and now we're waiting for one of two things. Okay, we are waiting for the green histogram to close below the red moving average. So all of these trading candles here, histogram is below. That means that momentum has not slowed sufficiently enough for that trading opportunity. Okay, we are essentially waiting for that close, and we do get it later on. There you can see our histogram finally closes below the red moving average. Okay, so what we are then waiting for, guys, is waiting for our trigger, and that's where we use the moving average. Okay, so now that we have identified our opportunity, and let's just put a line through it here at this point here, and let's just circle it. Okay, so at this point where price is, and my histogram, we are now looking for the entry. The entry that we are going to use for a short is when the candle closes inside the moving average. Okay, so on this particular instance, we want price, which is illustrated by the candle, to close inside this moving average. Okay, so where do we get that entry? At the close of this candle, that would illustrate my entry. Okay, so immediately when the candle closes, we can then open our short trade on the very next open candle. So in this particular instance, our entry would be on the open of this candle, and as you can see on the right hand side, our entry would have been 1.3050 approximately. Okay, now our stop loss, we would use either our previous high or previous low, and we'd maybe use just a handful of pips above that to make sure that we've catered for that. So in this particular instance, our stop loss would be 131.29. So I think, guys, let's just round this off to 130.30. We'll round this down here to 130.50. Okay, so there you have an entry and a stop. Now, what we would want, and we can just write this down here, so my entry equals 130.50, and my stop loss equals 131.30. Guys, that is a difference of 80. So 131.30 minus 130.50 gives me 80 points. Now in this particular strategy, I like to use a 1R take profit. So when I say a 1R take profit, what I mean by that, guys, is for every point I'm risking, I want at least 1 point of reward. Okay, so in this instance, I am risking 80 points, which means that I want at least 80 points of take profit, which means my take profit here is going to equal 129.70. Okay, that'll give me an 80 point take profit. So if we pop that in there, guys, we can immediately set it there at 129.70. On Friday, we got a nice trade, and we got 15, 30, around about an hour. We got into the market, we got our a nice protection from our stop loss, and then a take profit that hit within an hour. Okay, now what I'm going to do, guys, is I'm going to show you a quick example of how to use this as a long trade. All right, and we had a long trade in this particular instrument on the 18th of August. So I'm just going to scroll back there so we can show you that example quickly. Okay, so on this particular day, guys, we were looking for a long trade. So we would have been looking for price that would have been near the bottom. Okay, so we're looking for price and an entry so that price could move in a upward direction. Okay, now what that means is on the MACD we are looking for an opportunity that allows for the MACD to be below our waterline. Okay, so here we have it. Now contrarian. So below the waterline, we're looking for it to move in a upward direction. Okay, now for the trade identification, if you can recall, we want the green bars or the histogram to close inside of the red moving average. Okay, so as you can see here, those histograms are outside of the red moving average. And that immediately tells me that momentum has not slowed sufficiently enough for me to start looking for an entry. Now, let's just remove that quickly. There you can see my histogram close inside of that moving average, and that now tells me that I am ready to start looking for a long trade. Okay, so to do that, I need a candle close inside of the moving average. All right, so there I have a candle close inside the moving average, which tells me that I'm ready to trigger. The beauty of this strategy, guys, is I know a lot of you are going to say, but we had a histogram close previously inside, and you'd be right there. A whole lot of moving averages close there. But the beauty is all of these candles closed outside of the moving average. So we've got a built-in risk management system within this particular product. Okay, now let's get that entry. We can open the trade on the very next candle, so we can see our entry and our stop loss will be around the low. Okay, so for those of you that want to see our entry, here you have an entry here, 129.25, and we've got a stop loss of 128.37. Okay, so I'm going to round those up just for simplicity's sakes. So for entry, I'm going to say we got 129.25. My stop loss, I'm going to round to 128.25. That is a difference of 100 points. Okay, remember, I'm looking for a target of 1R. And just to recap, 1R means for every point I risk, I want at least 1 point in reward. So there is my risk, 100 points, which means that because it's a long trade, I want a take profit of 130.25. Okay, so that is ideally what we're looking for. What I can do is I can pop that take profit on there, 130.25, and as you can see on this particular day, it may have taken a little bit longer than the hour of the short trade, but given that it was 100 points in a day, that was around about 2 or 3 hours, we got hit at our take profit. Alright, also that is strategy 1 in a nutshell. A very simple strategy that makes use of 2 pretty simple to understand moving averages. The template is included for you guys, so if you would like to try or utilize this particular strategy, you can use the template so your chart looks identical to the one that you've seen in this strategy. The benefits of this, guys, is that when used in conjunction with the Telegram channel, we are looking at trades that are high probability on a daily basis, so you can drop down to a 15-minute chart. It allows you to pick up the bias, it allows you to pick up momentum, it allows you to have a nice execution within a easy to use moving average. It allows a risk management system in that you have a stop or a take profit at key support and resistance levels, guys, and this is a high probability trading strategy. All right, so thank you for joining us. You can send in questions at inquiries@blackstonefutures.co.za. Like I said, this is a pretty self-explanatory. You can watch this over and over again. My suggestion would be to try it on a demo account until you are comfortable within the parameters before trading live. But this is a nice all-in-one trading strategy. Okay, so once again, thanks for joining us, and please do come back for strategy 2, and hopefully we will present something to you that you can use on a daily basis. Thanks everybody, have a good evening.